Thank you. Good afternoon. My name is Smriti Rana. I am with Pallium India. I've been with Pallium India for 10 years, and I currently head the Strategic Partnerships Policy and Programs Division. And I'm really delighted to be hosting this series that we began last year. This series is part of this particular conversation today is part of a longer series of conversations that we will be having right through the year. And the theme is death literacy. And for some of you might be familiar with the phrase death literacy. For some of you, it might be a new phrase. Not everybody is comfortable talking about death. In fact, we live in a death-denying society, and the less said about death, the better. One would imagine that we're actually a society of immortals because it's only when we talk about death that we invite it. But let's remember that death is the inevitable consequence of life. If you're born, death will follow at some point. So the more we talk about it, the better it is. Some of you might know that in Bhutan, which has the, it scores highest on the happiness index. They talk about, there's a belief that they talk about death 5 times a day. And why is that important? Because it's only when we are aware of our mortality that we really start to live properly. And I just got a message saying that my voice is not very audible. Is it okay, Shreya? All right. So here we are. We are going to break the taboo around death and dying. We're going to talk about it. We're going to talk about different aspects of it. The last session, we talked about advanced care planning and advanced medical directives at a very, very critical time in our country, where the Supreme Court has now taken off quite a few barriers to the existing advanced medical directives document and the procedures. And we'll be happy to share that with you in another session. For those of you interested in looking at what the Living Will format looks like, you can go over to our website, to Pallium India, and I'm sure one of my team members will share that link with you in the chat box. So do take a look at that and have a conversation with your family about what your choices are if you were to get seriously sick. And today's session is the second in the series, and we're going to be talking about some very practical issues today. We're going to be talking about wealth management. We're going to talk about financial planning, and we're going to talk about what it is that we need to look at right now as we live to make lives simpler and easier and more comfortable for those we leave behind in terms of finances, in terms of all of that we have accrued over our lives. Very often, we know this, almost everybody in this room, I'm sure, has experience with at least witnessing conflict in the family after someone has died. And this is something that is easily avoidable. If we care about our families, if we care about what happens to them, if we want them to get along, if we want them to get fairness and justice in terms of assets and wealth, then this is a conversation we need to be having. And I'm very glad that we are having this conversation today with two very accomplished experts in the field. And I'm going to tell you a little bit about them in just a moment. I want to talk to you about how this whole series began. We started a project called Arohan 4 years ago. Arohan means to rise, and Arohan is basically
Smriti, your voice is breaking.
Yeah, can you hear me now?
Yes, yes.
So the program, as I was saying, was designed for people with lived experience, people who are either living with a life-limiting condition or a life-threatening condition, or their carers, either current or bereaved. And the idea of Arohan was to really assist people with lived experience to find their voice and ask for what they need, either from their government, either from society, in terms of media, in terms of policy reform. And because it's when we're sick that we are most disempowered. We become victims of the system. And it's very hard for us to ask for what we need when we're already grappling with such a crisis. And the Arohan project, over a span of 16 odd sessions, covers everything from how to, use your social media handles more optimally, how to approach your municipal officers, how to really understand the law around appropriate end of life in our country, and also how to engage with media, how to engage with the public, how to engage with people around you so that you can raise awareness, not just raise awareness, but also ask for what people who are living with these conditions really need and how to practically implement it. So this particular series on debt literacy, I'm very proud to say, is led by our Arohan participants and graduates. So I really want to thank them for taking the initiative of taking all their learning and really giving it back to the community and paying it forward. So I'm very, very proud of our Arohan program and of all our Arohan participants. So I would like to welcome today our experts. We have two experts who are going to take you through this session. And one of them is Mr. Murali, who is here. Mr. Murali, can I see your, I don't see Mr. Murali's camera on. Maybe he's, there he is, all right. So Mr. Murali is a banker by profession, and he describes himself as a constant learner. And he has served in all streams of the State Bank of India in 2018. And in 2018, he completed 36 years in the banking industry. And he has taken up an assignment now as a principal and faculty of staff learning at the Staff Learning Center for Saraswat Bank in Mumbai. He has graduated in arts from the Osmania University. He is a certified associate of the Indian Institute of Banking and Finance and a certified bank trainer by the National Institute of Bank Management and the IIBF. He handles digital banking, cybersecurity, international banking, and he has been a national facilitator for 2 years, for two major SBI mass transformation programs. Our other expert today is Mr. Saravanan, who is fondly called Sara by his friends, and he was an engineer by training and a financial consultant. He's become a financial consultant now by passion. He's a full-time wealth management consultant, and he is an IRDA certified advisor for all insurance products, a certified financial planner, trust and estate planner, a mutual fund advisor, and a certified retirement advisor. He is currently pursuing his master's in business administration, and he plans to complete his PhD soon. So we're in very good hands. I had the privilege of having this conversation with them earlier. And as somebody who's worked in the debt literacy field now for 20 years, I was shocked at how little I knew about financial planning. I was absolutely stunned by the information that they imparted, and which is why I'm very, very glad to be hosting this with them, so that you have the benefit of this knowledge. And I also want to say that just like advanced care planning, we sometimes shy away from thinking about writing our will or looking at our bank accounts and the finances and saying, there will be time for that later. In the words of a very, very wise friend, it's always too early until it's too late. So this is why we're having these conversations today. I would like to just start off with a little story. It's a personal story. I was adopted when I was a baby by my mother's sister. She was my parent legally, and she got very sick when I was 17. I had just turned 19 when she died, and although there had been a will left, it was left in her bank account locker, which I didn't have access to without a succession certificate. And so what followed was this absolutely horrific journey as a 19-year-old who was just bereaved, having to prove my heirship to the authorities. It was a catch-22 situation. The documents I needed to prove it were in that bank locker. I didn't have access to it. And it was a terrifying ordeal as a young person, and also a very traumatizing one. And I don't wish anybody to have to go through that, because it really sort of, it's a brutal experience to go through that when you have to prove your identity, especially when you have lost somebody this close. Very often we believe that as family members, we are natural successors. We are not. We are not. So this is our conversation today. And with that, I'm going to hand the mic over to Mr. Murali to first take us through the basics of what it looks like to nominate somebody, what the banking process looks like, and just the highlights of what we really need to know. We will do this in a conversational style after a few slides have been presented. Just a few housekeeping tips before we begin. I request all of you to please keep your mics on mute. Please make sure that your names are displayed. Feel free to use the chat box, but we will be coming back to the chat box at very specific intervals. We will not be answering the questions as we're going along because we don't want to interrupt the flow of the conversation. And at the relevant time, we will be picking up questions from the audience and taking it to the experts. If you all have personal reflections to share, I would request you to please save them for the last half of this program, because when someone shares something deeply personal, I really don't have the heart to veer away from that conversation. We want to give people that time, the respect of when they share an important and maybe sometimes a very vulnerable moment with us, but not at the risk of derailing the conversation that we're here to have. So we would love to hear from you, your personal experiences, but I request you to please hold them for the last half an hour of this session, when we will throw the floor open to all our participants, and you would be free to unmute and speak and share your thoughts and reflections and experiences with us. So Murali, I've spoken enough. I'm going to hand it over to you now to tell us what you know. Thank you very much. And I will come in from time to time to just sort of move the conversation along.
Thank you very much. Good afternoon to all of you, and hearty welcome to this post-lunch session kind of a thing. It's happening on a Saturday, and I owe all of my learning to on this particular topic is to Dr. M.R. Rajagopal, his initiative. And 2 years ago, Shreya called up and said, we want to share something about Pallium India. That was the new thing for me, and the caregiving and the love and affection that they have, the burden they have to reach out to community is extraordinary. I was spellbound. I was there for learning from at the hands of the experts, and the way they organize the master program is extraordinary. I think this learning is a continuous process. That's why in my statement, I say learning is a continuous process. Even till I die, I keep learning. So thank you very much. I fondly used to call her Madam Smriti, and she said, no, call me by my name. So I have the privilege of calling Dr. Smriti, simply Smriti. And so it's lovely to be here this afternoon to see all of you. Thank you very much. And as I've been described as a banker, before I take my presentation on, I want to share a couple of thoughts. When I handle a relationship in banking, a customer relationship experience, it is not the experience that happens to be at the time of establishing a relationship as a creditor or a banker. As a banker, if I lend money, I become the creditor, and then the borrower becomes a debtor. But in case of another deposit account, it could be like all the public come and open a savings account and current account and fixed deposit account. So at that point in time, the bank is a debtor. So the relationship varies, right? That is the one side of the banking. But the other side of the banking is when all the relationship is snapped off. And then by virtue of death of a person, the relationship is snapped and there is no further mandate available to the bank. That's a very, very painful situation. Now, as a faculty, I share with all my participants who are managers and down the line, hey, look, how difficult or easy was it to establish a relationship as a banker ab initio? It is all the more incumbent for you and I to establish the same kind of relationship, or much more than that, when somebody passes away in the as a depositor. That's what I keep saying. So I'll take a few slides for the benefit of all of us to understand this topic. If you can give me the share screen, I'd like to. Can you give me the share screen, please? If not, I would request Shreya to do it. I'll try my best to. My laptop, the other one did not work, so I put on my other laptop now. Let me see if this works on. Shall I see this? Host disabled participant screen sharing. It says here. Can you enable me screen sharing, please? Am I audible? Yeah, if I'm audible, I'm trying to do screen sharing. It says host disabled participant screen sharing.
We're just working on that, Murali. One moment.
Okay.
You can share now.
Yeah, I'll try to see. Yes. Just a minute, please give me a minute.
Murali, I can share it for you if you like.
Okay, in that case, I'll be happy. I'll close this. Okay, thank you. Yeah. Yeah, thank you very much. Thank you. Smriti and I were talking to and forth along with Saravanan. What can we give the caption for this particular 2-hour discussion? And she beautifully put it, setting my house in order. So I modified a little bit, setting my home in order, something I want to say that. But the point here is this caption is so very pertinent to all of us today to keep our house in order. When I say house in order, it could be including my kitchen room to be kept in order, or my tabletop to be kept in order, or my desktop to be kept in order, or all my papers to be kept in order. I mean, are they in order? I am always reminded of this caption called as, Viant TV. I don't know whether you heard of Viant TV, the logo that goes on. Clutter is the enemy of clarity. I was really touched. He said, this is very relevant to me as compared to my wife. My wife is extremely organized, but I am a person who put everything strewn out together. Clutter is the enemy of clarity. So this afternoon time for the next 50 minutes or so, we're going to see something on how to keep our house in order. So this is the conversation that we're going to make it interactive as possible. Quickly, I'll run through some few slides and then take some questions alongside, even as Smriti moderates. Shall we go to the next one? Yeah. So this thought came to my mind. So many of us are medical in the medical fraternity. I remembered of Hippocrates 2 days ago, and then he says, cure sometimes, we all know that as medical field, treat often. But the last one is all the more very, very important, which is the major focus of Pallium India: comforting always, care, comfort, and concern for another, empathy for another. And so I'm not a medical fraternity, so curing I can't do, treating I can't do, but comforting I possibly can do. So what can I do as a banker, right? So this is a thought that came to my mind. So let's focus on the area of comforting today. Yeah, let's go ahead and take the next screen, please. Yeah, this is what I was telling in the beginning of my sessions, that the compassion, do we have compassion? At the time of opening of an account, everybody comes laughing and says, sir, we can do that, we can do this, and establish a relationship. Starting of a relationship will nurture into its full-grown maturity and joy and love only when it is nourished and cherished and cared for at all times. So how do I maintain that relationship is in the hands of this service provider, right? So I tell the bank all the time, as a faculty, I'm also a faculty and the principal of the training college. So in the learning center, I tell people very, very essentially, I tell them, if not anything, take this from this session. There will be words of love and joy and compassion when you speak to people. That is the only relationship that can keep you going, right? This is what I tell people, and extremely important for us to do it. Now, why do I say this, and why did I put this as a screen here, is that we don't generally take care of the surviving family members who come to the bank saying that my mother I lost my mother, my husband, I lost my husband, or my wife, I want to settle some money, I don't have any documents, and so on and so forth. What is the way as a banker treats with compassion to that particular situation, right? So that's a questionable thing, but I believe days going by, banker is becoming more sensitive to be empathizing with the situation of the deceased family. Can we go to the next screen, please? Yeah. So a little bit of introduction, as I've already given. Introduction is when we establish a relationship as a debtor or a creditor, that is the starting of a contract between the banker and the customer, right? So the moment there is a death of the depositor, all operations comes to a halt and the mandate given by the depositor when he was alive ceases to exist. The contract is snapped off its ties, and all the money that is held in the account of the depositor, the moment he dies, becomes the property of the legal heirs of the account holder. When I say legal heirs as per law, right? So my friend Saravanan, who is going to talk on wealth and all its repercussions of handling wealth, he will be focusing on what could be a Mohammedan law or a Hindu law or a Christian law. How is it applicable to an Indian subcontinent? Within India, there are so many different type of religion, different laws applicable. How are they going to happen? That will focus a little bit later. And this is what I want to share as in the beginning of as a part of the introduction, right? So if there are any questions thus far, we can, otherwise we'll proceed ahead to the next screen. Yeah. So as I told you, establishment of opening of an account, a savings account or a fixed deposit account or a locker or a mutual fund or any of these financial, we call it as financial products, maybe banking accounts. The moment there is a death of the depositor, there are different ways of handling the disposal of assets of the particular deceased person. So what are those methods available? There are 4 methods. Number 1 is through various types of joint accounts, right? So when I am alive, I want to open an account jointly with my wife or with my son or with my daughter or with my mother or father, whomsoever. It can be my friend as well. They are called as joint accounts and they are also called as mandates. So what is the repercussions, or how does the bank handle joint accounts where one person dies and the other person is alive? We will see a little bit later. That's the first methodology. Second one is through nomination. This is a very, very important tool in the hands of the banker as well as the benefit of the customer, saying that in case something happens to the depositor, the nominee automatically enjoys the benefit of the assets of the deceased without going through much of legal implications, right? That's the second important thing. We will see what is nomination, a brief description of that in the next slide I've given. The third one is production of legal representation. This is applicable where the depositor has not opted for nomination ab initio, is not opted for nomination. And in that case, the legal course takes the recourse further. That is the legal representation. That's the third methodology of settling of death assets. And the fourth one is obtaining documents like simple letters like affidavit and indemnity, where the threshold limit is very small. Each of the threshold limits for different banks is different. Some banks have got 2 lakhs as a threshold. Some banks have got 50,000 as a threshold. So based on that policy, after the threshold limit, legal representation will come in. But before the threshold limit, simple affidavit, indemnity is taken. These are the 4 methodologies of settling of the assets of the deceased when the person passes away, right? These are the thoughts that I wanted to share with you, if it's clear. So before we proceed ahead, I believe I put a big torch with a lot of light on it for us to ponder, right? This is a time for us to ponder. For each of us on the call here, let's ponder. But before we ponder, I'll give you a brief introduction of nomination itself, right? So until 1985, there was no nomination rules applicable to any of the financial products in the country. That was the challenge faced by the bankers as well as the family who lost the depositor, that they had to go through a long and cumbersome procedure of getting a succession certificate or a letter of administration and so on and so forth. Legal procedures were so cumbersome, thanks to the wisdom that dawned on the regulators, that the banking company rules 1985 was formed, whereafter nomination came into play, right? So that is the advantage of what is the nomination exactly? You can see the genesis of that. I put this as a genesis. What was the need for nomination? This is mentioned, of course, we need not go into the sections and all that. Banking Regulation Act 1949 specifies nomination as available to all the financial products. When I say financial products, it could be a savings account, a current account, a fixed deposit account, a mutual fund account, or insurance policy. All of these are the things that occur to my mind as of now. All these products can be nominated in favor of somebody else whom I so desire, right? As a person who wants to register for nomination. So before proceeding ahead, my thought was, let this question peep into our minds. The last pointer overview. Have you nominated your bank accounts, lockers? It could be mutual fund or insurance policies. Please write this question. If you have already nominated, nothing to worry, really speaking. But if you're not, you better make a question mark after that. Yes, I need to go to the bank and nominate, right? Okay. The last pointer is the peek into mode of operation. When I say mode of operation, this is on account of this item number 1, where I have opened an account jointly with my wife. Let's say I open an account with my wife jointly. And what are the different kinds of modes of operation that is possible is what we're going to see further on, right? So have you taken mode of operation as joint account? This is the second question that you need to write down. All of us need to write down on a piece of paper. Have I nominated my account? Number 1. Number 2, have I opened this account jointly in the operation jointly with my wife and my with a husband or my brother or whatever relationship you want to have? And what is the mode of operation? That's extremely important, right? We will see a little bit further on. What is this mode of operation? So let's go to the next slide. Yeah. Okay. Yeah. So this is what I was telling you, some facts on survivorship and nomination. Number 1 is, you can see there, accounts with survivor or nominee. When I say accounts with survivor or nominee, I'll give you my example. That's easy to understand through an example. I'm alive still. So my wife is alive. I'm blessed with 2 children. But I said, when I open an account, I open an account as either a survivor. There are 3-4 formats of writing or opening the survivor account. That's called as a joint account operation, right? Either a survivor. That means either Murali operates or Vasanthi operates. Either of us operates, right? By the way, when you apply for internet banking or ATM banking, both of us get the benefit of operating the account digitally as well, right? So the other option is former or survivor. When I say former or survivor, whose name comes in the first? For example, a savings account. My wife's name is in the first, Vasanthi Murali and M Murali. Former or survivor means what? The former will be operating the account for all purposes. In case of her death, should there happen a death, then the survivor, that is Murali, the second holder of the account, automatically steps into the operation as a joint account holder. There is no need for us to go into any legal angle at all. That's a former or survivor, right? So I told you about either a survivor, former or survivor. The other option is the latter or survivor. Let's say Vasanthi's name is first and second is mine, joint account. Let's say it's latter or survivor. That means to say that latter will be operating the account, that is Murali will be operating the account for all purposes. And in case of death of Murali, then automatically Vasanthi will operate the account. So who will be the claimants in number 1? All the joint holders or survivors and nominee will be the joint account claimants for settlement of assets. That is number 1, condition number 1, right? So any questions on that, on point number 1?
Can I ask you a question, Murali?
Yes, sir.
We have almost everybody has a joint account. Is it necessary to keep a nomination again?
It is possible and it is required also. I'll tell you, very good question. Very good question. I'll tell you what. 2020, we had COVID. In some families, both husband and wife passed away. And they thought that, अरे दोनों को नाम है, either a survivor है, क्यों nomination की क्या जरूरत है? अब तभी पता चला कि तभी nomination की जरूरत है. समझो वो nomination अगर लेते तो nominee को easy हो जाता था. So good question. It is required to nominate one person in case of jointly operated account as well.
My son or daughter, anybody.
Anybody whomsoever you desire that the assets should be enjoyed after you go away. That's a question, right?
All these details have to be entered into the account?
No. You have to go and give there's a nomination application form is there. You have to go fill up that form, and then the joint account holders will sign that particular letter. That's a simple format is there. You sign that letter. Now, that's not the end of it. For example, you have given the nominee as your daughter right now, and after 5 years down the line, you say, "Arey yaar, mere beti ke nahi yaar, mera beta ka karna hai." You can variate it also, and you can change from your daughter's name to your son's name as well. So that is not permanent once and for all. You can vary it as well. Nomination.
So
Nomination.
thank you so much.
Yeah. Shall we go? Any
I-
other question? Yeah.
yes,
Yes,
madam.
madam. Yeah.
You see, in the question where the question of joint comes,
Yeah.
I think there is a little bit of drawback because for everything, the signatures of both the people are needed.
Yes.
Suppose a person is not here, then you cannot do anything. So is there a way out for that?
Mandate when it is a joint account
Joint
operated.
account.
Now, for example, in joint account also, madam, let me explain to you. There is a joint account
Yeah.
jointly operated by me and my wife, let us
Yeah.
say.
Yeah.
So at that time, the bank expects any variation in that particular mandate to be given by both of us.
Yes.
If it is only as joint account holder, then both of us have to sign. Now, if it is a former or survivor, let us say former or survivor, and my name is number 1, and my wife's number is as a survivor, then I can nominate alone. My wife need not join in the signature of the. Is okay? So because I am holding the mandate of former who is authorized to operate the account, I can nominate somebody else. That's possible.
Thank you.
Right? Yeah.
Thank you.
Yeah.
There's a question. I think we can go over this as well one more time. Is there any difference between either or survivor and former or survivor option?
Yes, there's a lot of difference. I'll tell you a lot of difference. I say when either a survivor, I'll take my own example. Murali and my wife Vasanti. I've opened the account as a mandate joint account, either or survivor. When I say either or survivor, either of us can draw money, either of us can deposit the money, either of us can enjoy the benefits of it. Supposing one of us predisposes, then what happens? Supposing I die, my wife automatically enjoys the benefit of that account. She continues on thereafter. Okay. And she can, if required, she can also add one more person. That is the either or survivor. That's number 1 advantage. Number 2 advantage in either or survivor is both of us can get the internet banking, digital banking advantage. Both of us can get separate user ID password to operate on the account digitally. Number 2. Number 3, both of us can get individual printed ATM card in my name as well as she can get an ATM card. Both of us can operate the account. Both of us can draw the money. That is the either or survivor. The second thing you said was former or survivor. In case of former or survivor, the former, let us say Murali is the former and Vasanti is the survivor. Only Murali has got the mandate to operate the account. Survivor will not get any other benefit until I die. That is the disadvantage of a former or account, survivor account. Okay, I hope I answered the question. Yeah.
Absolutely clear. And I'm mindful of the time. I know we have some ground to cover, so I'm just going to share our screen one more time. Please keep putting your questions in the chat box and I will bring them to Murali's attention at the appropriate time.
Thank you. Yeah, I'll go to the second B portion of it. Accounts without survivor or nominee. So most of us are really afraid to ask, "Arey, kiska naam dalna hai? Ya nominee ka kiska naam dalna hai? Decision abhi tak nahi hua hai." Aisi situation bhi hota hai. Today, the bank has come to a conclusion very categorically that all accounts have to be nominated. Period. That's it. Why? The reason is very difficult, cumbersome legal proceedings available where nomination is not available or joint account is not operated on. So, in case a person desires that his or her account should not be jointly operated or no nomination is required, he has to give in writing that he does not want any nomination, the repercussions of which are disastrous. I would encourage all of us here on the call, please opt for either survivorship jointly operated account or either a survivor, former or survivor, latter or survivor, and or give nomination also. Where no joint holder or nominee or registration is done and no will is also available. By the way, regarding will, we have a good expert here. My friend Saravanan will be sharing on that. And dying intestate. If you see the word in B, the second line I've mentioned there as in bold, I've written there intestate. The word intestate means a person who died without writing a will. That person is called as a died intestate. So if I die without writing a will, incidentally, let me tell you, I'm also on the torch. I showed the torch, right, and the light. And then Saravanan has been telling you must nominate, you must enter into a will. This is the second time he reminded me. Now, third time onwards, he stopped reminding me at all. So the ball is in my court. I have to execute a will. So we believe that we have come here to be living here in this world forever. not realizing what would happen the very next minute. I would encourage all of you on the call here, decide to make your accounts, all financial accounts, operable jointly, either a survivor, former survivor, go for nomination, and invariably consider writing a will. Extremely important, because the consequences of not writing a will is the claimants will be legal heirs. What would happen? What would happen? I mean, how the court would come to jurisprudence, and then what would happen to my family members is a kind of a litigation that would happen after my death. Unnecessarily, I leave everything open-ended and going, right? So this is a thought I thought I must share it with all of you.
Murali, I'm
Yeah.
just gonna come in here with a question for you, which I think was a question that we discussed when we did the preliminary discussion.
Yeah.
A lot of people believe, so there are two questions here for you, and I'm going to do it one by one. A lot of people believe that it will automatically pass on to the next of kin.
Yeah.
Is that true?
That's not true. That's not true. I think a detailed answer of that will come when Saravanan handles this.
Okay, fine. So we'll come to that.
Yeah.
The other thing is, we're talking about joint accounts, etc., etc. That is the formal sort of format of doing it. Very often, and I'll take my case in point. My mother is bedridden. I use her ATM card to withdraw money and things whenever she needs it. Okay. In the event that she passes away, and I'm not her nominee, or I might be her nominee, I don't know. But say there are funeral expenses, there's something, I've run short of money. So I have her ATM card. I go and I withdraw that money, and I use it for her own usage or whatever it might be. How far off, how much trouble am I going to be in? Is it okay since I'm her daughter? I have, she has, sorry. So I am her, I know for a fact that I have a power of attorney from my mother. I want to say this to the group. I have a power of attorney from my mother to operate her assets. Okay. Now, what happens if I do this post her death?
Yeah, good question. Very important question and very relevant to all of us. Please be updated on that. I have opened a joint account with me and my wife. I've got internet banking facility in my name. I have an ATM card in my name. And for practical purposes, I give all my user ID, password, credentials to my wife, to my son, to my daughter. Everybody knows my user ID, password. Now, the question that Smriti is asking is, on my death, on the date of my death, the power of attorney that I've given to somebody else, or even the credentials that I shared with my family members, whoever it could be, is also dies with me. It also dies with me. Let us be very clear on that. Some of the families who came to a bank and asked, "Sir, वो तो परसों गुजर गए सर, मेरे को burial का expenses चाहिए थी, इसलिए मैंने 1 लाख रुपए निकाल दिया." Sorry, गलत है. You are a criminal. It's a criminal case, by the way. The moment the person passes away, the mandate with the customer and the bank ceases. That means you cannot operate on that account at all. You're supposed to inform the bank as far as possible, inform the death of the depositor to the bank immediately. And after that, sometime you can give the death certificate, because all these are extremely important. Along with the power of attorney, the mandate also dies. That's it.
Sir, in this case, Smriti is the power of attorney holder as well as a legal heir, isn't it?
Yes, sir. Legal heir, that the stand of a legal heir will come eventually when it is proved in the court of law.
Okay.
But that joint account holder relationship comes to an end because power of attorney is valid till the person is alive, sir.
Okay. Thank you, sir.
So thank you very much. This is a very important point for all of us. I think we should just take a minute to understand this. If you are a caregiver for somebody who is seriously sick, please know that on the death of the person, this is very important for us to know. Operating their account, even if you have the ATM, even if you have all of those, is outside of the law. And so please be very mindful of this particular point. And this was a very big eye-opener for me personally, as somebody who just believed that having this power of attorney allowed me the flexibility to do this while she's sick. and after her time. So this is something for all of us to remember. Thank you, Murali, for that.
Just a thought. In case the older person has got a lot of money in his account, possibly you can transfer that money according to his will to somebody else's account before he passes away, he or she passes away, so that there's very little difficulty to claim that money.
Geeta has a question. How do you handle instances? Maybe that is something that Mr. Saravanan is going to talk about. Or
Yes. I think we'll wait for some more time for that question to be answered by Saravanan.
We're bookmarking the question, and we will come back to that. Yes. Okay, fine. Coming back to the screen.
Yeah, let's go to the next screen, please. We have discussed this point, this slide. Let's go to the next screen.
I moved ahead. Can you see it?
I can't see that there, but if it is moved well and good, I can take my my presentation here.
Settlement where nomination is registered.
Now it's come. Yeah, this come. Yeah, this time. Oh, settlement where nomination is registered. As I told you, friends, that nomination, please consider nominating all of your accounts. It could be your savings account, current account, or fixed deposit account, or mutual fund account, or insurance policy, right? So life insurance policy, health policy is not, of course, it's a separate subject altogether. Nominees' claim will arise only after the death of the joint account holders. Another same example I'll take. I and my wife. So COVID has taught us very clearly that, look, anything would happen anytime. In a family, husband, wife, children all passed away. Now, who will be the claimants? That's a different topic altogether for another day. But the point here is, if I and my wife have opened a joint account and I have nominated somebody else as either a survivor account, or it could be a former survivor account, I nominated somebody else, that nomination will be applicable only on death of the depositor. Until such time, the nomination is not valid. Number one point. Number two is, if the depositor has registered a nomination, very important, with the bank, the balance that is available in the account of the deceased depositor will be transferred automatically to the nominee's account or transferred to his money. But the point here is, the nominee will be holding this money as a trustee, pending legal settlement of that particular dispute, if there is any. Let me exemplify this example, this particular point a little bit more. The Nomination Act itself in 1985 rules came into vogue for the purpose of the bankers to settle the assets of the deceased quickly, as soon as possible, without any delay. Okay. So since that has happened, what happens to the legal jurisprudence? Let us, in a family, there's it's a medium-sized, a large family where there are 4 children or 5 children. Maybe mother and father are still alive, parents are still alive, and the depositor is rich enough, and then he wants to ensure that everybody gets a deal, gets the balance of that outstanding available. Let's say there's only one nominee. The nominee can claim this money from the bank, but that nominee will hold this money in trust to be settled with the other legal heirs based on the legal jurisprudence. That is the stand of nomination. Second point. Third one is very simple thing. If an account is nominated, all you have to do is give a claim form. There is a separate claim form for that. And then bank passbook, if that's available. If it's available, checkbook, if it's available. And very importantly, cards and internet banking, just like we spoke a few minutes ago. The cards which are there have to be surrendered to the bank. And internet banking, if any, taken credentials, if any, you have to give in writing that I will not be using these credentials anymore from tomorrow onwards. That's the second statement that you need to give. Third one is a copy of the death certificate. By the way, many of us are under the impression that original death certificate need to be given. No, it's not required. You need to give a Xerox copy of it. The manager will see the originals and say, verified with the original, keep the Xerox copy with him. And then KYC of the nominee. If somebody, let's say the son or a daughter is a nominee, his credentials are taken, KYC is taken, know your customer, and then declaration by the trustee. You'll say, I hold this money in trust for disposal eventually, is what the statement is. This is the simplest way of settling money by the banker if nomination is registered. Okay. If there are questions on this, we'll take, otherwise we'll proceed ahead. Yeah, settlement of funds. If the
Hello.
Yeah. Yes, sir.
Registration is done by the bank itself?
Yes, sir. Registration is done by the bank itself. Yeah. And
Thank
also, sir, after registration is done, they will
Huh.
also write it in your account itself. When you take a statement of account, you'll say nomination registered बोल के आ जाएगा, statement में भी आ जाएगा. आपको भी
Thank
पता चलेगा nomination registered हुआ है बोल के.
Okay, thank you.
Sir, in case of no will,
Yes, sir.
in case of no will,
Hmm.
and after the person passes away,
Yeah.
what happens to the status of the locker?
Now, locker also nomination can be done. Locker also nomination can be done.
In case it's not done, sir.
In case it's not done, then legal proceedings will continue on. Now, if there is a will connected with that, then the will take the upper hand. Regarding which Mr. Saravanan will be speaking about it, right?
Okay, thank you, sir.
Yeah, thank
And
you.
one moment, please. Are the nomination rules for a demat account the same as a bank account,
Yes,
especially
sir. Yes, madam. Yes, it's the
The
same.
answer is yes.
For bank accounts, mutual fund accounts, insurance policies, all accounts are same. Now, there's something called as a central KYC. Most of us are not aware of that. That is, supposing I have opened an account in one bank, I register this account and I go to another bank and do some mutual fund transaction. I do another place, insurance. It's not necessary for me to keep on giving my Aadhaar card and my PAN card everywhere. Everybody is asking. No, you can register this centrally in something called a CKYC. Let me not confuse you on that. That can be possible so that the cumbersome job of sharing all these credentials by way of documentation at every place is not required to be done often.
Murali, there's one last question before we move on. I'm mindful of the time. What happens when the nominee is abroad?
So when the nominee is abroad, he has to enter into power of attorney with somebody else and give the power of attorney to settle the assets of the deceased.
Okay, thank you very
And
much.
bank will do an extensive search report and due diligence will be conducted. Only then the money will be disposed of to the power of attorney holder of the nominee in case he's not in India. Then also there is a possibility of the money being transferred by way of foreign remittance by settling the money from the Indian account to that person. It depends upon the status of that person. If he's an NRI or NRO or NRE, the status will vary accordingly and the stand will be taken eventually. Yeah.
Thank you very much. Rachel has a comment. Her husband and she have lockers in joint names,
Okay.
but an SBI says nomination is not required.
That was prior to COVID, but today's condition we have learned COVID has taught us a lot of lessons. You go to the same banker, tell them that I need to give nomination, they will take it. One person's nominee can be done.
Thank you. Okay, so just coming back to your slides.
Yeah, I'll go a little bit faster now. Nominations, I think we saw this. Now, settlement of funds in the joint holding with either a survivor, anyone or survivor mandate. Anyone or it should be former or survivor, as I told you, latter or survivor. Any of these modalities is possible. How do you settle the funds? Number one is survivors submit a simple letter along with a photocopy. I give another my example, same example. Murali and Vasanti, my wife, right? Open an account. Anyone or survivor. I die. What she has to do is simply give a letter to the bank saying that my husband, such and such a date, passed away. Here's a death certificate. She gives her KYC details. And if there's a fixed deposit, time deposit, the time deposits continue on to be held in a single name. As simple as that. So this is a stand taken by the bank for joint operations. I don't think there's any complications on that. Okay. Yeah, let's go to the next one.
Has it moved?
No. Yeah. So, as I told you some time ago, the nominee or the surviving joint account holder holds the money so received as a trustee for the legal heirs. However, it is for the courts to decide. Because nomination has come, the rules of nomination only for settlement of funds has come in, but the settlement internally in the family is based on the court order. The moment the bank settles the dues, the bank will not play any role here at all. It's the family for them to dispute. It's always better in such cases, therefore, to invariably go for writing a will, which Mr. Saravanan will share. Number two, a case of court order restraining payment to the survivor, to the nominees, is obtained, the mandate or nomination would be infructuous or invalid. What is this point? I'll tell you a little bit in a minute. Let's say I have got an account in my name, Murali Murgesh, and then I've given a nomination of my wife. I've given a nomination of my wife. Okay. Now, in the meanwhile, I've got fat balances in my account and fixed deposit. My son comes to know that all this money, there's some dispute in my family, let us say. There's no dispute in my family, by the way. Okay. So my children come and say, both of my daughter and son, they say, why should this money go only to mommy? I think that money should come to us. And they bring a court order restraining the payment of the bank by the to my wife. Then the court's order will take upper hand as compared to the nomination. As simple as that. That's the only point that I want to bring about. Okay. I hope that's clear to all of us. Right. Can you give me a thumbs up on that if it's clear on that? So till the moment the bank settles the money on account of nomination, before that, if the court order comes, then the bank will be constrained to adhere to the stipulations of the court order and not the nomination. Right. That's the point I want to make. The last one will be interest will continue to be paid to the depositor, applicable to the savings account after the death of the depositor. Right. Yeah, let's go ahead. What's the time available for the bank? It's also called as the TAT, turnaround time is 15 days from the date of receipt of the claim. That is, you give all the claim papers and whatever documentation they have mentioned, which we have discussed earlier. If you give those papers, and within 15 days, the bank should settle all legal cases, like where there is no joint account operation, where there is no nomination. But in case of nomination and joint account operation, they should settle the claim immediately. Within 1 or 2 days, they must settle it. But in all other cases where legal proceedings are involved, legal jurisprudence is involved, where letter of administration is involved, the court issues an order. In such cases, 15 days from the date of submitting of the documents. This is the time available at disposal for the bank to pay off the deposits. Yeah. I think this is one more area. This may be the last. The point here is there are some missing persons also. What is the provisions for missing person? As per provisions of 107 and 108 of Indian Evidence Act, presumption of death can be raised only after a lapse of 7 years from the date of his order being reporting missing. If somebody is missing, my father is missing, let us say, I go and report to the police station and they record it from the date of reporting 7 years, then until such time, nothing can be done. But after 7 years, then we can go in for Indian Evidence Act and the nominee will get the benefit of that and a court order will be issued. And based on the court order, the bank will be disposing of the money available at the disposal of the missing person. That's so far as the missing person is concerned. Yes, we can go ahead. So last but not the least, this is only very important tips that I thought I should share for all of benefit of all of us. Number one, plan for the best and prepare for the worst. Preserve all title documents carefully. Extremely important. What about your title deeds, house property, car loan properties, so on and so forth, right? Insurance policies, health insurance policies, right? Safekeep of passwords and profile passwords. Very strange thing happened in our bank one day. Husband and wife both passed away. Children were there. They knew some user IDs were available. And then what happened is they tried to log into the account. Thank God they were not able to log into the account. Otherwise, they would enter into criminal offense, right? So it's important for us to upkeep our passwords and profile passwords so that when we are alive, we can help each other out, right? But law says that my user ID password, my profile password should not be shared even with my wife. That's what the law says. If there is any malafide happening between husband and wife or the children, then the bank is not responsible. Second important thing. Third, ensure nomination is done in all accounts, mutual funds, and insurance. Please make a question on, please make a pointer on this. If you have not done it, kindly go and do it as soon as possible. That's my humble suggestion to you. Nomination for social media accounts, like Mr. Saravanan also was saying, what about your WhatsApp account, your internet account, or maybe mails you have, right? So many of these social media accounts where we are really tied up digitally. There also, I believe we need to nominate appropriate people. Execute will, when, never, wherever needed. Extremely important, right? So next session will be on that. So we'll focus on more learning on that area of will. Prepare a family must know register. Train the next kith of kin and spouse and prepare a guidance note, what would happen. Last but not the least, keep the medical emergency situations immediately. Keep it so handy that it's available in your wallet every time. Like, for example, if you have the wallet, put all that legal documents of health readily available. It's available here. I don't know what would happen to me, right? So immediately my wife should be able to see where things are available so that in an emergency like this, she'll be able to handle the situations, right? This is all I wanted to share. Thank you very much. The time is
Thank you.
already
Thank
5
you.
o'clock now.
We're right on. We're
Yeah.
right on time.
Fine.
So thank you, Murali, for that very enlightening session. And we are going to just spend a few minutes to go over some questions. I would like to proceed very quickly on to the next half hour.
Stop sharing the screen then. Yeah,
And we're gonna move on to the next session with Mr. Saravanan, who's going to talk to us about very important aspects of wealth management when it comes to bereavement and when it comes to death in the family. But I'm just going to quickly look at the chat box. What about online banking? If I am a nominee and I'm operating the account for the primary holder.
Okay. You're the nominee and you're the primary holder's nominee. Okay, after the death of thing, you will not be given, the mandate will not continue unless the bank permits you to do so. Okay, you have to go to the bank and tell them that I am the primary account holder's nominee. So I submit my papers as a nomination for you, and they will have to give you a separate user ID credentials for operating the account. You cannot operate on the primary account holder's user ID credentials at all. Don't ever do that. Yeah.
So it's the same logic that follows.
Yes,
with the
same logic that follows.
with the
Even
ATMs
online.
and the checkbooks. We are not allowed to operate it post the time of death till
Absolutely.
such time as that nomination becomes recognized and it's come
Yes.
into force.
And that's a very simple document. You'll have to give a letter, that's it. Nothing more than that. Yeah.
So now I'm going to move on to Mr. Saravanan, who is a wealth management expert. And just getting all of this documentation in order, getting all of this stuff in order is one part of it. How do you actually manage the assets? This is what we're going to talk about. We're going to spend about 20 minutes to half an hour. In the last half hour, I request those of you who have the time to stay back and let's have a conversation about some of the things that we may not have covered. Over to you, please. Rachel, I've made a note of your question as well. We'll come back to it at the end of Mr. Saravanan's presentation.
Thank you very much for giving me the opportunity to speak to all of you.
Mr. Saravanan, are you in trouble sharing? You're muted, sir.
Are you all seeing the slide?
It's on presenter mode, sir. You'll need to come out of presenter mode. And you can go to while you pull up your slides, Murali, are you here with us?
Yes.
There's a question from Rachel. I suppose we can take that while Mr. Saravanan lines up the slides.
Sure.
Suppose I keep one of two children as a nominee. Does the other come to know the amount that passes on to the nominee?
No, he will not be knowing. Because that's kept very confidential as per the fidelity and secrecy rules of the bank. The banker is not supposed to declare any of those amounts available in the primary account holder's name, even to the nominee. Only later on, when the nomination is established and proved, will that nominee come to know how much of money is available. So the brother will not be able to get to know about the balance.
Thank you. Thanks, Murali. Mr. Saravanan, your slides are up. Please
Yep.
take over.
Good evening, everybody. Thanks for this opportunity. So next half an hour to 45 minutes, we would be talking about what you should be doing with your wealth. And I was introduced to you as a wealth management personnel. And the title also says, how do we handle wealth? See, financial planning, wealth management, and this title says introduction to estate planning. So let's move on quickly to understand where are we coming from. The slides are not moving.
Maybe we can reload them.
Yep.
Oh, it's moving.
So the
now.
slides are moving.
Yes. Please go ahead.
Able to see? Okay. See, we are so obsessed on our daily life. We are so focused on wealth creation, and seldom we care about the other two aspects of our wealth. One is how do we protect wealth and how do you transfer wealth? See, we all know, as the discussion was there, we are not immortal, and one day we will have to leave behind all our wealth which we have created during our lifetime. There is no way we can take it along with us. So wealth transfer is also very, very important. And before that, whatever wealth we have accumulated, the wealth has to be protected, and the protected wealth needs to be transferred. So today we will be broadly dwelling into the topic wealth transfer. Wealth transfer is the estate planning. So before we get into wealth transfer, why should I protect my wealth? Where does the danger come to my wealth? See, I have earned during my lifetime. And what are the three risk factors which one can look at? The three risk factors, it could come from creditors if you are a banker, if you are a borrower, if you have been a businessman, you have borrowed, and those creditors can be a suitors for your accumulated wealth. Then predators could be from the family also. The disgruntled or dissatisfied family members can also become a danger to your created wealth. And the liabilities, if you are a professional, somebody like a doctor or a lawyer or a hotel owner, the public liability can hit hard on your accumulated wealth, or a professional liability which arises from your practice can also eat away into your accumulated wealth. When I said predators, just look at a situation. It happened, and these were on the news. A very wealthy man transferred, the father was a wealthy man of 100 crores in net worth, and the son inherited, only son. He inherited the 100 crores, and he was very happy that things went right. And it went on only for just 8 months. And after 8 months, wife filed a suit, divorce suit, asking for alimony at 50% of the net worth. So the man who died would never have imagined that his wealth would be at stake at 50% by a simple divorce case. So if he has made some structures, this situation would not have raised for his son. So there are ways and means you can protect and you can transfer your wealth to the next generation. So wealth protection from these risks, and how do you transfer without having to go through legal tangles is what we are trying to discuss today. Let's get on to the next important aspect. I'm going to ask you a few questions. The question reads like this: do you want to have the full control over your assets while you are alive? You can ask this question to yourself and get an answer. The next question is, do you want to take care of your loved ones even if you are incapacitated? Incapacitation can come from coma or terminal illness. Do you want to help your loved ones even if you are not able to do the work, or even if you are incapacitated? Do you want to help your loved ones? This is the second question. The third question is a series of questions. Do you want to give what you want to, whom you want to, when you want to, and the way you want? So if you people have answer to all these three questions as yes, this particular session is very, very relevant to you. And I don't see in any of among the audience, none of you will have no as an answer. Let's move on to answering these questions. Estate planning. What is the estate planning? Estate planning is not about your assets, but estate planning is all about keeping the family harmony and passing on joy to your family rather than a mess. So let's look at what is an estate plan. Estate plan is done to give one's property as per one's wishes. It is the wish of the asset owner. It is the wish which truly should get translated, and the asset should be passed on to the next generation as per the asset owner's wish. The estate plan helps to avoid the application of succession laws. The estate plan also helps to minimize the disputes in the family after death. So these are the objectives of having an estate plan: to fulfill the wish of the asset owner, to avoid succession law complications, and to keep up the harmony of the family. Now, the question is, you have been talking about estate plan. What is one's estate? What are things which qualify as estate? The answer is very simple. Everything that you own today, everything that you will own on the day of death, and everything you will own after your death forms part of your asset, part of your estate. The definitions are, I think, you are able to appreciate. Whatever you own today, whatever you own on the day of death, and whatever you will own post-death, all the three will form part of your estate.
Mr. Saravanan, yes,
Yeah.
Mr. Saravanan, this is where we ask that question. If you can stop sharing your screen, because this is an important one that I stumbled across with you. What do you mean by assets you will own after your death? Can you please elaborate on that?
Yeah. See, we are all aware of the assets that we own, because that also I'm going to ask you a question. Let's assume that we know what assets we know own and what is our net worth. What we don't know is, what if we were traveling in an aircraft bound to Nepal last month or so, or a few years back, Cochin flight crash. So each of the passengers who lost their life were awarded 2 crores as the compensation. The 2 crore compensation belongs to you, and that is also to be transferred. So how do you do that? If you have contacted a professional for will writing, the professional would have included something called a residual clause. The residual clause means whatever I have stated in the will and whatever I have not stated but forms a residue of my estate through anything that comes to me after my death, probably an insurance proceed, probably a compensation for air travel crash, all these things form an estate post your death. So those things can also be willed away if a professional includes a residual clause in your will. Is that clear, ma'am?
Thank you very much.
Yeah. So having said about what are your estate, now let's look at what are the assets you will own. Can I ask you another question? What is an asset? Asset by definition is something which can give you cash or get converted into cash. That's what we call it as asset. So what are the different assets one can own? Let us go through the physical assets. We are all familiar. The house we own, the precious metals that we own, these are all our physical assets. If you look at the next part is financial assets, which Mr. Murali has been talking about for the past 1 hour. Like these are all FDs, mutual funds, post office, shares, and the cash that you hold. All these things are under financial assets. The next most important asset of this age is digital assets. I don't think anybody will disagree with me when I say these are the most important assets: your mobile number, your email ID, your social media handles, your Twitter profile, whatever you hold as digital assets, these are to be willed away. You will agree with me, with mobile number and email account in place, a lot of banking transactions become completely easy. Suppose you wanted your son to have your deposits enjoy with the bank details, and your younger son has the mobile number and email ID. It is possible that he can play a mischief and have all the deposits withdrawn. So all these things are to be willed away. Today, the digital assets are much, much important than your physical or financial assets. The fourth type of asset some of the authors and IP holders can have is intangible assets. These assets cannot be touched and felt, but however, the last one is, it is not land building precious metals, it is the royalty, the IP, intellectual properties that you hold in your name, are the assets which are called intangible assets. Maybe you have authored a book, whatever sale royalty comes from the book, or you have been instrumental in having a intellectual property registered in your name. Whatever income arises out of somebody using your IP can also form part of your assets, intangible assets. Right? Now coming to Mr. Murali was trying to highlight something called intestate. Intestate succession. Intestate means a person who has not done his duty of asset transfer through a will. A person who dies without leaving a will is called intestate succession. What happens if somebody has not left a will? The law takes over, the law takes its own course. If the person was a Hindu, the assets will be divided as per Hindu Succession Act 1956. If he or she were to be Christian, then it takes over as Indian Succession Act 1925. If he or she be the Muslim, then it is governed by Muslim personal law, Shariat law it is called, of 1937.
Mr.
Any
Saravanan,
questions?
yes, here we have this question of mixed marriage when the couple is of different faiths. So there are two parts to this question. One is, if one is a Hindu, one is a Catholic, which succession act will come into play? Is it that of the survivor or is it that of the deceased? That's my first question. The second question is, if it's a mixed marriage and the children are not declared, have not declared their faith, then which succession act comes into play, please?
Yep. Ma'am, here answer is in two parts. First question, answer is in two parts. If the deceased has not gone through any conversion process, then the succession will follow his religion, original religion. If he has gone through the conversion process, documented conversion is there, then he will follow the converted religion's succession. Coming to the children of...
Sorry, so it is the deceased person's religion that will come.
Yes, it is the deceased person's religion if he has not gone through any conversion. Okay,
Yes,
ma'am?
please. Yes, please. Thank you.
Yeah. Coming to the children from the mixed marriage, if it is not traceable to a particular religion, the Indian Succession Act 1925 will provide. So the children will get their succession as per the Indian Succession Act 1925. Is that okay, ma'am?
Yes, sir. Absolutely. Please carry on.
Yeah. Going ahead, why do most of the people see? We have gone through this. Interstate succession is not the right option because law will take its own course. So, having known that, if I don't write a will, I would not be doing justice to the family harmony. Even after that, most of us don't write a will. Why? We have tried to find some answers. The first and foremost is my children will not fight over the assets. This, if some parent is going to say like this, some individual is going to say like this, maybe this is from a highly overconfident statement. 99% of the family, we have legal disputes in sharing of the assets. Number two, I have nominees and I don't have to make a will. Here, I would like to bring about the definition of nominee. As Mr. Murali has already told you, nominee is only the trustee and he is responsible to receive the proceeds, not to enjoy the proceeds on his or her own. It is in the act of trustee, he or she has to distribute it to the legal heirs. So in some of the products, this nomination also takes a different definition. So let me give you an example of life insurance. In life insurance, if it is a beneficial nominee, the person has nominated his mother as the nominee, then blood-related nominations are taken as beneficial nominee, and the entire proceeds is paid to the mother in case of death, and the wife will not have any legal right to claim the proceeds, not even sharing with her mother-in-law. So the life insurance as definition of nominee, there is a further definition from, I think, 2019. It is called beneficial nominee. So nomination, you will have to be very, very careful which product, where you have nominated. So it is better to write a will. And in case of life insurance, will also does not supersede the nomination. Nomination, if it is for a family member, if it is a beneficial nominee, that becomes the final. The nominee becomes the beneficiary. Then next,
So one
important
point,
is, yep, any questions?
Sorry, please unmute Murali.
yeah, only one thought that came to my mind in the insurance was the Married Women Property Act.
Yeah, MWP also I wanted to cover. Yep.
Yeah, you can briefly mention on that, sir.
Yeah. In case of in case of life insurances, there is a beautiful provision in life insurance. When you are taking life insurance, kindly include the MWP clause, Married Women's Protection Act. So MWP clause makes, if that is included while taking the policy, the MWP clause says the proceeds are to go into a trust and no creditor will have a say on the insurance proceed of the deceased. Husband and wife are there. Husband has a life insurance on his head and he passes away. The wife will get the life insurance proceeds as a creditors in normal course will have a say on the proceeds of the deceased. However, if the deceased has included MWP Act while taking the policy, then the creditors will have no right to claim any portion of the proceeds which has come from the life insurance policy. MWP Act. These are all small things, but has got a very, very high implication when someone passes away. Then next is making a will. This is another major apprehension or myth among the individuals. Making a will take my time. It is a time consuming. It is a complex phenomena. It is an expensive affair. Believe me, It's a very simple thing. It is not time consuming. People like us will be able to handhold you in drafting your will, in getting it registered. All that we will be able to do, and it is not costly. It would be fraction of your asset value. It will be less than 0.00000001% of your asset. So it is not expensive. The last but not the least, certain people have the taboo. They fear writing a will because they feel writing a will is inauspicious, or that can be sounding the day of death. This, I think we should not have this thought process, because it is we who have to plan the wealth transfer, we who have to facilitate the transfer of wealth to the next generation. So if somebody has this taboo, please come out of it. And it is good if you can plan the wealth transfer through estate planning tool. Having said this, let's get on to the different tools of estate planning. I have talked about estate planning and why it is important for you to follow the estate planning procedures. Now let's look at what are the different tools available for you in doing your estate planning. There are 5 different tools. The tools run like this. The most popular estate planning tool is will. The second one is trust. The third one is power of attorney. The fourth one is living will. The fifth one, the most important of all, I would call it, if you have a minor children, even before will, create a letter of guardianship, which we will talk about it. What is the necessity, need for letter of guardianship? Let me get into each of these tools. I will not dwell too much time. I'll just run through, and specific doubts and specific requirements, probably we can take after this session. You will have Smriti giving you my contact details, and we can discuss specific issues. Now, there is another myth. Will has to be typed, will has to be registered. No, the basic definition of will does not require it to be typed. A handwritten will is accepted, does not require to be stamped. It also is not mandatory for the will to be registered. However, all these things if done, it saves a lot of trouble for your family. Let me put it this way. A clearly typed will, a duly registered will, saves a lot of hassles for your family member. The will, when it is made public after your death, the will is always can be challenged. When it is challenged at the court of law, if this will is a registered will, chances that the will overcome the challenge without any trouble for your beneficiaries. I'll give you most of the time the will is challenged on 2 accounts. One, the claimant or the person who is challenging says, my father was bedridden and no possibility that he would have written this will. My father was insane, and the will which people are saying he has written is void because he was not in sound mind. These are the 2 general challenges a will faces. If the will has been registered by the testator, by the will writer, the 2 challenges does not stand in front of the court of law, because when you go and register the will is normally witnessed by 2 witnesses in front of sub-register, and you also sign in front of the sub-register. And as a proof of registering the will, the sub-register, a government servant, puts a stamp of his office and signs the document. So in front of the court of law, if somebody is going to say, my father was insane, the registrar's signature will come to the defense saying that, no, he was sound mind. Then if somebody says bedridden and he would not have made this will, he was incapable of making this will, the register stamp would definitely come to the rescue saying that, no, the person was mobile, he came in front of me, he signed. So the will becomes almost a sound proof that the will was an authentic will. So it is, though it is not mandatory, though it is not compulsory by definition of will that it has to be typed and registered, it is always good for you to have a typed and registered will which can stand the court of law. And don't have an impression that once I make a will, it is very difficult to change. No. During the course, your wishes can change. As you get old, probably the behavior of people can change. As you have change in your attitude, you can be changing the will n number of times. And the last will, the date that matters, the last will prevails over all other wills that you have made in the past. And the last will becomes the executable will. So n number of times you can make the changes to the will, you can redo the will, you can re-register your will. So your wishes are important. So go ahead and make a will which exactly reflects your wishes. And disadvantages
I have
of
a
will.
question.
Yeah. Yes.
Should the registered will be copy given to the son and daughter?
Sir, that is the that should never be done, sir. Will is a testamentary document. So if you make the will contents known, then you are setting up probably cat in the pigeon box. So your life will become miserable once the contents of the wills are known. So you should never ever set the will in public. Your registered will, if you have a friend of yours, little younger, or son of your close friend, probably leave it with them. Or you, as she was saying, Smriti was saying, even a locker can be a dangerous proposition, because if the locker is not operable by your legal hands, then it can run into trouble. So we offer the services. People like us, we offer the services. Like what you have to do is you will have to inform your family members that yes, I've made a will, I've registered a will, and the copy of the registered will is available with so and so. In our case, all our clients, we have made sure that they inform the family saying that a copy of a registered will is available with Purple Pond, who has handled my wealth management. So you can go talk to them, get a copy of the will, and they will also help you in executing the will. This is the right way of doing it. Please don't ever give a copy of the will to the son or daughter.
There are two more questions.
Yep.
One is, what happens if the will is lost? And I'll let you answer that and move on to the next one.
Yep.
What happens if it is lost?
No, it is the duty of the testator or the person who is writing the will to safekeep the will. If the will is lost, simple, it is intestate. The person has died intestate. He has not left a will. So it will follow the succession as per the religion.
Okay, thank you very much. The second question is, can a will be written in favor of any organization as a donation, and can it be changed?
Madam, as I think I made it a point, the will, it's a declaration of your wish. The wish can be 0 to your family members and 100% to charity. No questions asked.
Okay, thank you. Thank you very much. Please proceed.
Yeah, there are some disadvantages of using this tool for estate planning. What are the disadvantages? Your entire wealth will be in public domain after your death, because will is a public document. Anybody can ask for a copy of a will. The will is not a useful document during your lifetime. If you have fixed assets in 3 presidential cities, Chennai, I think Delhi, and Calcutta, if these 3 presidential cities, if you have assets, then the will has to be probated. Probate is a process of getting an administrative order from the court. What does the court do? They look at the authenticity of the will and they give you an administrative order. And as per the administrative order, with the administrative order, the executor who is named in the will can take up the disposition of assets or partition of assets as outlined in the will, and he can oversee the distribution of assets to the people who are named as beneficiary in the will. And
this is sorry.
Yep. Yes, ma'am.
This is applicable only in these 3 cities, is it?
The probate is applicable only in these 3 cities. The process of probate is applicable only in these 3 cities.
So that's
otherwise, the will executor, the copy of the will is enough for the executor to divide the assets in favor of the beneficiaries as outlined in the will.
So just to recap, that's Delhi, Madras, Chennai, and Calcutta.
No, it's Calcutta, Madras,
Calcutta, Madras,
Mumbai.
Mumbai. Okay, sorry. I stand corrected. Calcutta, Madras, Mumbai. Presidency
Thank you.
cities.
Thank you.
Okay. Yeah.
And sorry,
The
one
last disadvantage is the will can be challenged.
sorry, Mr. Saravanan, just to come back to the previous point.
Yes.
What is how is the will to be probated? What is the process?
The executor of the will, who is in charge of distributing the wealth, has to take this will copy, and there is a probate procedure in the court, and he has to file for the probate. And the court calls for certain documents along with the will, and the beneficiaries might be called in by the court. And after verifying all this, then the court releases an administrative order in favor of the executor, and the executor with the administrative order can dispose the assets.
Thank you. So if there are any further questions regarding the probate, we will take it at the end of the session.
Yes.
Thank you.
Yes. And the last disadvantage, as we talk about, is the challenging of will. Wills are challengeable. And as I said, if it is a registered will, and if you have taken care, and the person who has drafted it has done due diligence before drafting, and he has used his expertise, and most of the time the will, when challenged, stands the test of court, and you get your will passed through. Okay. So with this,
sorry,
yeah.
the question pertaining to that is, can any person challenge the will?
Yes.
Okay. Thank you. Thank you very much.
Yep.
Please carry on.
Coming to the next tool in the estate planning, the next is trust. The trust is normally done for probably a larger estate, larger assets. Trust, the difference between trust and estate, trust and will is, trust is a document during your lifetime. You can have a trust deed. You will have to have a trust deed. You will appoint a trustee who will pass on the benefits to the named beneficiaries. Here, the assets are going to be intact. The assets are not going to be disposed. The assets are going to be intact, and the revenue generated or the benefits accruing out of the assets are going to be distributed to the beneficiaries as outlined in the trust deed. So, who are the constituents of trust? The person who is creating the trust, the person who is going to oversee the trust, that is the trustee, who is appointed by the trust creator. Then you have the beneficiaries, who are the direct beneficiaries of the property of the trust. Now, the settler, they call the writer of the, the creator of the trust a settler. You will have the trustee appointed. You can even have your trustee to outline a procedure who will succeed the trustee. Who all can become a trustee? What is the qualification? Or his son becomes the automatic trustee after the death of the trustee. All those conditions you can inbuilt into the trust deed. Then I have just outlined the difference between trust and will. The major difference, two of the differences. One, the will is a testamentary document. Will comes into effect after your death. Trust is a document during your lifetime. So the next important difference is the trust, the will does not have a control over the property being handled post disposition. The beneficiary who takes the property can sell it the next day. So the mall in your name can be sold the soon it is disposed, or soon it is the executor gives it to the beneficiary. Next day he can sell it. But if you want the mall in your name to be there for years and ages, if you have created a trust, you can define it in the trust deed that the mall cannot be sold. The mall will generate income which can be shared among the beneficiary. The trustee will oversee the distribution of the rental income to the beneficiaries, and the trust will hold the trust property for ages. So this is the most important difference of will and trust. Now, types of trust, I'll just run through. There are different types of trust, major being public trust, a private trust. The difference between public and private trust is public trust, the beneficiaries are not well defined. Private trust, the beneficiaries are well defined. So public trust, you don't know, it's a large mass of people who can be the beneficiaries. So charitable trust and religious trusts are public trust. If the benefit is targeted towards X or Y, then they become the private trust. Trusts can also be formed as revocable trust, irrevocable trust, or you can create the trust as a testamentary trust. That is, you will have a trust deed left in your will, and you can say this trust gets into effect post my death. Those trusts are called testamentary trust. Then the third tool is power of attorney. We also spoke about power of attorney by Smriti during the early part of this discussion. Power of attorney, and more so, this is a power of attorney pertaining to financial products. Here you can have a power of attorney drafted, and you can give the power of handling your financial products when you are incapacitated, like when you are not able to go to the bank, when you are not able to sign your documents. This power of attorney, if constituted, gives the power to any of your family member or your close relative to handle your financial products, whereby you will not be troubling them for all the expenses that they are incurring due to your hospitalization. This is also a most important power of attorney that you can, tool of estate planning, which you can keep it ready. The next tool is a living will, which I think Pallium, as an organization, as members of Pallium, you would be aware of this living will. This is the directive, medical directive. You can define, or you can tell the medical fraternity, you can tell your family members as to how you should be treated and what is your wish during your terminal illness or during the last few days of your life. So you can always put forth, consult a doctor. This is a little complicated procedure. A professional will be able to take you through registering this living will. It has to have the consent of the medical practitioner. It has to be made in front of the magistrate. Certain strict provisions are there. I hope the living will is already dealt in detail by Pallium. So this is one of the tools, and it is becoming much more popular. A lot of people are wanting to use this to give a medical directive about their wishes about their last days of life. The last of the 5 tools that we talked about is letter of guardianship. This is very, very important if you have minor children. Let's look at guardianship. Guardianship, natural guardianship, you will be, father and mother will be the natural guardian. And we all assume that in the event of we passing away simultaneously, maybe in a car accident, maybe in an air crash, our brothers, sisters will become the natural guardians. No, it is not the case. If both the natural guardians are not there, then it goes to the court. Court decides. Certified guardian. And certified guardian, believe me, most of the time, court does not believe in individuals. Court believes in organizations. And most of the time, the guardianship is given to orphanages. That's a painful thing, but that is the reality. So if you have minor children, it is very, very important to create something called letter of guardianship. Name the person whom you want to be the guardian for your minor children. Then, if this letter of guardianship is available and made known to some of your family members that you've already left a letter of guardianship, and probably in case of letter of guardianship, you can even give it to the guardian so that in the event of the death, he can immediately claim the guardianship without court interfering in the guardianship and your children going into orphanages as the guardians of them. So the third is the testamentary. Sorry. Almost we are there. Living will and
While Mr. Saravanan pulls up his slides again, just to let you know that the latest directive from the Supreme Court is that the judicial magistrate first class is not required to register your living will, which is a huge barrier removed. We can talk about that if there is time, but I'll just wait till Mr. Saravanan gets back on, gets his screens back up. In the meanwhile, there's also just a couple of questions. Mr. Saravanan, if you're ready.
Yeah, I'm done.
I think you have a couple of more slides.
2 slides.
Like to just, Indra ma'am, can we just wait for a few minutes?
Yeah,
then we
sure.
just
Two slides. So this guardianship, you can make it testamentary also. If you don't want to make it known during your lifetime, you can just leave it in the will form also. It can be a testamentary guardianship. Then comes, this is one product orientation, which I want to tell you people. This can also be looked at as a tool. This can be used as a conduit of transferring wealth. You can have a whole life policy, and after your death, it seamlessly passes on to your designated nominee, and the nominee being a beneficial nominee, he becomes the absolute owner of the insurance proceeds. So this can also be used as an effective wealth transfer mechanism. With this, I thank you for the opportunity.
Thank you, sir. Thank you so much. Thank you very, very much.
I will now transfer it to Smriti for the follow-on questions, if any.
Yes, please. Thank you. I'm sure there's a lot more to discuss. We have about 15 minutes. So, Indra ma'am, I'll hand it over to you now
First of all, I think this was a very informative sort of, conversation by both Murali and Mr. Saravanan. Now, I have one question for Murali. Murali, now the thing is that Mr. Saravanan said something that when there is a nomination, the person is not supposed to be he is like a guardian of that money or whatever is there. If there is an account, then that person is supposed to be just the guardian. He is not the owner of that money. Is that correct?
Trustee.
I think you're muted.
Muted.
Murali, you're muted.
Yeah, I've unmuted. You see that the nominee gets the benefit claim from the bank and holds that money in his trust. In other words, he holds it. If there are no legal complications coming his way, he will enjoy and become a beneficiary.
Okay.
That is the stand.
Ma'am, Indra ma'am, can I elaborate on this? Let's look at a deceased has 3 sons and he has nominated only the younger son in the bank. The younger son should act as a trustee receiving the fund from the bank, and he is supposed to distribute the receipt to the other siblings in line with legal hire certificate. So he is not the beneficiary. He is not the beneficiary. He is only a nominee. And if the nominee happens to be a sole son, single son, then he becomes nominee cum beneficiary. If he has siblings, then the nominee has to act as a trustee in dividing the proceeds among the siblings.
Okay. I never knew that. But you see, if you have different nominees, you have about, for fixed deposits, and you have suppose 2 children or 3 children, and you can have for different people.
Yes.
Then there is nothing to be done because that money goes straight to the person concerned.
No, madam, this is a biggest mistake we make during our lifetime.
Why?
I will give you are from which city, ma'am?
I'm in Delhi. I'm in Gurgaon.
Gurgaon.
Yeah.
See, if it is a financial asset, dividing it, and you would be very careful in apportioning it to people and you will nominate accordingly. Then also, if you have a demat account, there comes the devil. The demat account could have something like ITC as a share. Though today's value is 10 lakhs each and FD of 10 lakhs, the second person whom you have nominated for demat account, as per your statement, all are 10 lakhs, it is equal. But the other person who gets FD can always say, boss, FD is 10 lakhs and is going to grow at the rate of 6%. There, my mother has packed jumbo jets inside that demat account and it can fly high. So I want to have a part. So in essence, all has to be pulled together and all has to be equally divided.
Oh God.
No, that is in case of that shares are involved in demat. But if it is in a bank, it is there. And let's say I am having 3 children, I can nominate differently. I can give a different nomination for a deposit A, a different nominee for deposit B, and so on and so forth. Right?
No. Okay. Thank you.
Ma'am, it is always good, even with the nomination, write a will. Express yourself in the will. Yes, sir.
One moment. Yeah, no, one
who
moment.
are trying to ask a question, please unmute yourself and start the question.
Mr. Saravanan, one moment. I just want to come back to some people who've been patiently waiting with questions. Dr. Kanagasabai, just one moment, I'll come to you. There was a question that was asked very early by Geeta about how do we pay for the expenses of someone who has passed away if we have to wait for the expenses to be, legally apportioned. So how does that happen? And that was a question that we had bookmarked for Geeta. So I'd like you to please address that.
Yep, I can give you an answer which may not be very palatable. Probably you will have to curse the deceased and you will have to bear the expenses. You will have to go through the procedure to stake claim on the financial.
No, but the problem was when I had to do the funeral for my husband, I could not handle my account because it's a joint account. And it was a sudden death. So nothing could be done. So I had to borrow money from the family for the funeral expenses, which ran to almost 1 lakh. Because I had to keep the body in the morgue for about 6 days for both the children to come. So and even now I'm still having problem with the bank accounts, with the demat account at HDFC Bank. It's still not transferred, though I'm sorry to say people made it sound easy, but I'm still running from pillar to post, literally pillar to post. And every bank in HDFC itself, I've given 4 death certificates, original, not even copies. So luckily I'd asked for about 30-35 death certificates, so I have. But it has been a very, very difficult, even till today. The last 3 months after he died, everything had to be paid for either by my friends or by my relatives. So that's why I asked, how do you manage to pay?
Very sad, but probably we'll have to take help of people like Mr. Murali and use some influence in getting the tangle unlocked. Otherwise, as per the law, procedure has to be followed in unlocking the value of the deceased.
So what we'll do is, I would just like to come in here, Geeta. I will connect you with Murali, and I think we can have a longer conversation about this. Is that okay?
Yeah, thank you.
Yeah.
Right. I'm also going to take a couple of other questions that were in the chat box. One was from Shishir, which is, what happens if the joint account is held by 3 people? Murali?
Yeah, joint account, same analogy will follow. There you will that's actually called a partnership account. In savings bank account also 3 people can be operating an account. Now it depends upon what is the understanding between the 3 people. A, B, and C join together, open an account. For what purpose are they opening the account? That has to be specified to the bank. If it is for a common purpose for accomplishing a goal, then that can be acceptable. And then mode of operation should be clearly mentioned there. Based on that mandate, the bank will permit transactions in the account. Even the internet banking facility can be given accordingly.
Thank you.
There also nominations can be taken. Yes.
Thank you. Sam had a question. What happens if the executor of the will dies before the person who's need the will, Mr. Saravanan?
Yeah, this is something normally does not happen. Probably then again, court of law will have to take its course. Generally, you can even leave a clause in the will itself. If something were to happen, so and so can become the executor in absence of so. So one of the important aspects when we take the will writing into consideration, we have certain due diligence done, and normally we have an younger person, at least 10 to 15 years younger than the person writing the will as the executor. These are certain things which we take into consideration while drafting it, but sometimes the Murphy law works and things go wrong. Probably a clause can be built into the will writing. In the event of the named executor pre-deceasing, then so and so can be. That can be built into it.
Thank you.
Your chartered accountant can be the executor?
I didn't get the question, ma'am.
I said chartered accountant can be your executor?
Yeah, the executor is the person whom you have the highest confidence.
Is it essential that you should always have an executor in a will?
Yeah, I understand.
Is
Sir,
it compulsory that you should have an executor always?
the beneficiary, they themselves can execute the will if you have a highest level of confidence that the beneficiaries will be in harmony in taking your will through. But generally, this legal, if the will is challenged, somebody says, I am also a beneficiary, and this will is not the actual will, or it is not authentic. If somebody is going to challenge the will, if an executor is there, that is one node through which all the to and fro communication happens to the court and things become easy.
Likewise, in the case of loss of a will, if it is registered, can't a certified copy from the sub-registrar?
Yes, sir. Yes, sir. You can definitely, that is one of the advantages. Thanks for bringing it up. See, in case you have registered the will, a copy can always be obtained. A certificate copy with a small fee can be obtained from the register office. That adds to the authenticity, that adds to the safety net of you doing the will. Thank you. Thank you so much, sir.
And probably one more advantage may be there. See, if it is not registered, the village revenue authorities may not act upon it to effect mutation. They will insist on some court order. But if it is registered will, in most of the states, straight away you can request for mutation in respect of buildings, in respect of land. So that is an added advantage, probably, with regard to registration.
Fantastic, fantastic points.
Absolutely.
Thank you.
So the answer stands modified. Mr. Saravanan's answer to the earlier question stands modified with the Hariharan Saab's response now.
Thank you. We have 5 minutes, so I'm also going to come back to people who had some things to ask in the chat box. I'm going to request that our answers and our questions also be brief. Can a registered will be kept at home with someone trustworthy? Is that an option?
Yep.
The simple answer is yes.
Yes.
Yes. Dr. Kanagasabai asked, do we have to register the guardianship of? Sorry, Dr. Kanagasabai, please go ahead and unmute.
Yeah, guardianship have to be registered.
Sir, it is not. The document does not require you to get that registered. But again, to prove the authenticity of the document, a registration helps in automatically making it authenticate.
Okay, and the probation.
A small expense and small work that you will do will go a long way in getting it authentic in front of the people who are going to challenge it.
And probating, you told about 3 cities where to probate the will. Is it chargeable, or how much is what will be the charges like?
No, it is a time consuming and there will be some expenses associated. and the probate order, all that, the legal counsel will give you the cost. It is little time consuming and there will be cost attached to it.
And one more thing is about one child, single child you told, sir. It goes to the child nomination. But the wife will also be there. Suppose the husband dies.
I didn't get you the, I didn't get the
the
situation, sir.
husband is account holder. The husband
Okay.
dies and the nomination is in the child's name. The wife, she should also get some share. No?
This is, can I just?
Mr. Murali, you want to take that question or you want me to answer?
No, I'll take that question. If I've understood him correctly, husband passes away and he had given a nomination of, let us say, his son, child. So the child will receive the money as a trustee of that particular assets of the deceased, and he will settle the score with his family. That is his mother and other children if they are.
Fine. Fine.
Sam did you have a follow-up question, Sam? I saw your hand up earlier, and then we'll go to Vandana, after which I'm sorry, but we're going to have to, we've been here for 2 hours. But Sam, are you first, please?
I think I'll let Vandana go first. Mine was at least partially answered. She has a question. Let her go ahead.
All right.
Hi, Smriti. So my question is probably a little bit different from the queries that everyone's asked. So I talk from the perspective of working with patients who come from rural India, and also a lot of these families where the patient is terminal have the mindset of not including women in there as a joint account holder, or maybe having their names in the assets. So when a male member of this sort is dying, and also Mr. Saravanan had said, why do they not want to make a will? One of the things is that nobody wants to die. Even a dying does not want to die. So they don't have a will. When you talk of the will, they always will say something like, oh no, I'm still not dying, so why should I make a will? That is the mindset of probably some people in rural India. How can we help the women and children in such cases? Because I've worked with so many, and the male member dies, there is money in the bank and there is property, but the will, one can't get through to them to make the will or make them understand that there should be a power of attorney, or maybe include the name of the children of wife in there. So my question is, how can I help the family who's going to be left behind? Is there a way to make it simpler for them?
I'll partly answer that question. Saravanan sir, have you got any?
Yeah, go ahead, sir. Go ahead. From the banking side.
From the banking point of view, madam, let me tell you, balance available in unclaimed deposits since Reserve Bank of India is 48,000 crores in 22. 21, 48,000. 22, it is 51,000 crores. 51,000 crores of deposits are unclaimed and available in Reserve Bank of India in the DEF account, Deposit Education and Awareness Fund account, right? The only way, I can empathize with your situation, but the only way is spreading awareness. And there's no other way than to spread awareness. That means to that extent, the husband or the male member is uninformed that the benefits of his deposit should go to his family, his wife. So only awareness, madam. That's the only way to go about. This is my view. Is if Saravanan has got any other view.
No. I definitely empathize with your this thing, and I appreciate your concern about the rural population. See, slowly the awareness is coming on, but this is not going to spread like any other WhatsApp University news. It has to be taken to each household. Probably, if you can include people like us in spreading that, some sort of local language or vernacular, if we can talk to them, groups of 10 families, something like that. Or you yourself can create certain scenarios without naming the person, without naming the family. If you can do a small scenario in front of them, maybe, I'm not saying it will help, maybe it can move a little. 2 out of 10 can hear you and start some efforts towards this estate planning activity.
Thank you
Tough.
so much. I am
Tough.
going to reach out to you via Smriti.
Sure, sure.
Smriti knows
Vandana,
I
I am
interact with
saying
her.
it is going to be tough, but it is not
Oh.
impossible.
No,
Yeah.
Mr. Saravanan, I interact with a lot of people, patients, terminal patients from rural India. So I'm
We
going
are
to reach out to you via Smriti and request
Please,
you to
please,
help me out in this.
please,
Thank
please.
you. Thank you so much.
Thank you,
Any
Vandana.
email.
I think you've just given us one more module in the death literacy campaign for India. So we will work on that together along with other people present on this call. I am very, very sorry, but we're going to take one last question. And I know Revati has been very, very patient. Mr. Abraham Philip and Revati, these are the last two questions for today. Revati has asked a question: is there a time within which assets have to be distributed between the successors by the nominee? Is there a timeline by when that has to be done, Mr. Murali?
Yeah, that is, I don't have a particular case like that in mind, but as far as I know, there has been no claim where a nominee has received the money and not settled in his family. It has not come to my notice. Maybe there are, but I don't have a straightforward answer to that question.
On a lighter note, I can answer. It is the pull from the beneficiary. It will make it happen next day.
All right, thank you. Mr. Abraham Philip, you've been very patient. Our last question for the evening from you, please.
Yeah, thank you. My doubt is that can the husband and wife can have a combined will, or whether they should go for separate will?
Yeah, this is a short question and a long answer. So this we call it as mirror will. So when couples are involved, we call it a mirror will. Mirror will goes like this. The husband writes a will disposing all the assets to wife in case of eventuality, and wife writes a will disposing all the assets in the favor of husband. So in case of both of them die together, even in that they call it time of death, and it overrules, and to whom the assets get disposed, and the disposition starts from wife or husband as the time of death may be. So what you will have to look at is, it is very, very important to create a mirror will. Husband and wife, both of you are holding assets, then we call it as mirror will. You will have to go for a mirror will instead of trying to have an individual wills. It's called a mirror will. Type of will is called mirror will. It will address your husband and wife situation, and we can handle it.
Thank you.
Thank you very much. We are 5 minutes overdue for ending our session. Normally, I had my doubts on whether we should actually have a 2-hour session, but clearly all the information given here was so important, and majority of the people who logged in stayed on for the duration of the session. I have to thank Mr. Murali and Mr. Saravanan for such an engaging, important, and vital session. There was not a sentence here that you both said that was not important. There was nothing here that is not useful to us. So I'd really like to thank both of you for taking this time, for really joining the movement of death literacy in India. And this is what the palliative care movement is all about. It's not just for medical professionals. It's for everybody who is invested in making sure that not just the people who are sick and unwell and close to the end of their lives, but the people who survive them are also ensured that well-being, because prevention of suffering is palliative care. So thank you all very much for being part of this. I hope by this information, you're able to prevent suffering in your own families and going further. I'm just going to let Mr. Saravanan and Mr. Murali have the last word before we close the session, please.
Yep. Thank you. Thank you for this opportunity. And we enjoyed the conversations. I've just left my contact coordinates in the chat, my phone number and email ID. If in case any of the participants, or if you have some of your relatives who would want to consult, probably you can share the contact coordinates. We'll be very happy. And maybe we will do it at a fraction of the cost which you would have imagined to do. Thank you. Thank you for all your patient listening.
Thank you.
Thank you. Thank you very much, Smriti. I enjoyed being here. But one fact, as a strong reminder, I would say, is that we have heard a lot, but what action do we take is extremely the decision of each one of us. So I've heard today that I must nominate, I must, enter into a will. So I think I'll talk to Saravanan offline to say that I do a mirror will. That is my stand from this particular session. But I'm glad that I was of use to so many of you. If you need any help, you can call me. Any banking related issues, you may call me. Having worked in the bank for almost 4 decades, I could possibly help you out in any of the areas of banking. Thank you very much, Smriti. And this is the least we can give it back to whatever you have done and Dr. M.R. Rajagopal's initiative in Pallium, India.
Thank you. So let's make a pact, all of us who are still on this call. By the end of 2023, everybody has a living will written. Everyone has a financial will written. Everybody gets their nominees in order. And let's make sure that by 2023 December, hopefully not that long, all these, we get our houses in order, yeah? All right, so thank you very much and God bless you all. Take good care of yourselves. And we'll see you next month with our next session. I hope you'll join us then. Thank you. And thank you to the technical team in Pallium India and the Aarohan team and all the Aarohan graduates for making this happen. This is your project and I'm very grateful to be part of it with all of you. Thank you and good night.
Thank you.
Thank you, everyone. Bye.
Thank you.
Thank you, Shreya. Thank you very much.
Thanks. Bye-bye.
Thank you. Bye-bye.
Bye.
Thank you, Saravanan, sir. Thank you very much. Thank you, Smriti. God bless you.
Vishnu, we can close the session now. Thank you. Thanks a lot. Take care, everyone. Geeta, I'll get in touch with you.